I hope my background isn't noisy.
Welcome. Good morning. Welcome to another episode of Learnbiz the Podcast. I am Lisa K, one half of the show. My co-host Sandy B. Good morning. How are you?
Good morning, Lisa. How are you?
I'm doing great this morning, and we're also joined by the lovely ZaZa Davis of ZD Investment Group. Good morning, ZaZa.
Good morning, Lisa. Good morning, Sandy.
Good morning.
We are so glad you could join us today. Sandy, I don't think we've ever had someone representing commercial investments on the show.
This is definitely a first, and I'm excited to ask some questions here.
Absolutely. So I think to get started, Zaza, if you could tell us a little bit about your background, introduce yourself and tell us a little bit about your background and who you are.
Yeah, sure. So good morning to all of you all out there who are watching the show this morning or afternoon or whenever you tune in. I am ZaZa Davis of ZD Investment Group. I have been in real estate. I've been a real estate investor for just about 20 years, but I've been in the commercial space for about the past 5 years. And I have just really been growing in the commercial space with commercial multifamily apartment buildings. So it's a very interesting space. I'm enjoying it. Um, and that's pretty much where I am now.
That's really awesome. So you've been in real estate for 20 years. So moving into the commercial space is not totally new for you because you've already been in real estate.
Well, what I can tell you is, quite frankly, when I made the shift into from residential to commercial real estate, I didn't even know that I had shifted over. It's like I fell into it. The difference between residential and commercial is really a door. So, as for single family or residential investments, that's four doors, and then commercial is five plus doors. So the first property that I actually had that was or acquired that was a six unit, things started changing, and I go, well, wait a minute, the financing, who the lenders are, and certain other things about the transaction changed, and I kind of fell into it, but I realized one of the best parts of commercial is forced appreciation. And I'll talk to you guys a little bit more about that later. But there is an opportunity there, unlike residential, that relies on comparables or comps, for forced appreciation, which is really puts you as the driver or the captain of your own ship. So, yeah, but it's the difference of four doors is residential, five doors starts the commercial, and
Interesting.
on from there.
I love that analogy because I've been working mostly as a realtor myself, working on the residential side. And so you have really been, the way you describe it, been thrown into almost another world by that fifth door, huh?
Yeah, the fifth door will do it. Although the asset size at this point is larger, much larger. Like I said, we do apartments, multifamily, so they're communities. But the difference between commercial and residential is just one door.
Right. So that's very great. Now, when did you actually form your business, ZD Investment Group? How long has the business been in existence?
The business is rather new, the entity itself, but as you know, in the real estate space, one form of your protection is going to be your LLC or how you hold the asset. But the business itself has been in existence for just about the time that I made the leap over into commercial, maybe just about 5 years.
Okay, so do you use your business entity to hold all the commercial assets, or do you handle that kind of like a lot of people do when they invest in residential? Like there might be an LLC per property. How does that work in on the commercial side?
That's a great question. With the with liability and certain other things, you most likely would want to hold your different assets in different LLC entities. ZD Investment Group is just the umbrella company, so to speak. But yeah, the assets for liability purposes, you quite likely would want them in their own entities or LLC.
Absolutely. And for anyone who might be concerned about why, can you go ahead and explain why that is important to put these different properties in different LLCs?
Yeah, certainly. So, I mean, like you can think about it in terms of a scenario, the old slip and fall type of scenario, where you have a tenant on one property that, God forbid, has an accident and they come to sue you. You wouldn't want to have all of your holdings in that single LLC because they would be up for grabs in that single lawsuit on that one property. So having your properties, your other properties and other LLCs would certainly be helpful. Now the downside, which you have to weigh this to having multiple LLCs, is obviously you have more accounting fees, more filings, more paperwork to keep up with. But if that incident or that scenario were to play out that I just gave, I think it would be well worth maybe the few extra hundred or maybe thousands of dollars in accounting fees and the time spent to maintain those legal entities.
Wow, very, very, very cool. Thank you so much for explaining that. And I'm going to have more questions, but I'm going to turn it over to Sandy B because I'm sure she has some questions for you too.
So I first have to salute to those who are in our chat. Thank you so much, Uncle Stu, for your support. Good morning to you.
Good morning, Uncle
Thank
Stu.
you so much for your commentary and for coming in to check us out this morning. And also good morning to the one and only Doug. Thank you always for checking in with us.
Doug.
Definitely appreciate you. So ZaZa, I would ask, what inspired you to go into this commercial space? I mean, I think of real estate and I think of, these large projects or even the smaller scale projects. And most of the time we don't see folks like us in this industry. So what inspired you to go in there?
Honestly, Sandy, and that's a great question. Thank you for that. I like the challenge of the commercial space. I mentioned forced appreciation, the opportunity there to kind of be the captain of your ship when you're making an investment. I guess I'll talk a little bit about forced appreciation and what that looks like, since I've brought it up a couple of times now.
That'd be great.
But one of the biggest difference between residential and commercial is that piece. So again, with residential, you have comparables or comps that determine the value of your property. When you buy a piece of commercial property, your rents or the income that you basically can produce or let's say produce from the property is going to create the value. So if you get into a property and there's an opportunity to increase your rents, then you can basically figure out what that asset will be worth in the long run. And a simple way to look at that, I'll give you a quick example just for those listening in to make that a little bit easier. But like, let's say if you bought a property and, we'll just use like a smaller one. Let's say it's a 5-plex and you had $500 rents when you went into the property. Well, if you could say you look at your comparables in terms of Rent-A-Meter and some of those other tools out there, maybe a Zillow or you get a good realtor, let's say you determine that there's an upside potential for those rents to be $1,000 a month, right? So you'd have $500 additional per month per door. So that's $500 times 5, that's $2,500 additional dollars per month that you could potentially make. You take that number, you multiply that, and I'll just do some quick math for you, and hopefully I don't screw this up, just doing it off the top. But let's say we can create it 500, just do the math, times 5 is 2,500 times 12, and then I can divide that by a cap rate. Let's just use 0.06, okay? for a cap rate, that creates $500,000 in additional value for the asset. So I don't have to rely on comparables or anything. I have to rely on my knowledge of the market rents and what income streams I could bring. Now, I talked about adding $500 additional per month over 5 units, but quite frankly, with a commercial property, you could add storage. That could be additional income, or you could add another revenue stream to a property and you could do that same calculation, and that's how much additional value you're adding. So there's plenty of room for opportunity there for savvy investors.
So when you mention another revenue stream, are we talking things like some units may have like a laundry facility, or I'm wondering if vending machines, or would those be the things that you're speaking of?
Absolutely. Absolutely. So these are the things that you can think about adding to a commercial investment. It could be as simple as your administrative fees. It can be application fees. All these things are revenue. They're adding to the bottom line. So when you look at the asset like that, and especially laundry or adding storage to a property, there's certainly room to improve your bottom line and improve the asset sell price if you sell it. Or another way to capture it is you could also opt to refinance the asset.
So I've always heard that, I should not buy a residential property first. My first investment should be some type of investment property, and even commercial would be considered in that space. What are your thoughts on this commentary that a lot will say, don't go and put your money into residential first when you're getting your very first property?
Well, the best way to look at that, a part of me, I agree with it wholeheartedly, because when you do an investment property first, whether it's a commercial multifamily or just falls into the residential category, one big thing to consider, you do that first, you have an additional income stream. So when you go to qualify for that mortgage or whatever it is that you ultimately want, you've already created another income stream, which is going to be helpful to your affordability factor for whatever you're going to buy anyway. But another aspect of that is you start the clock. You actually start the clock because, as you know, and you ladies are smart, appreciation happens. When you buy real estate, the appreciation clock starts. So you're starting to build your net worth, and you're also giving that asset time. So I say start the clock sooner than later. Go out there and buy that investment property first, and then go and impress all your friends and family and bring them to your nice home and decorate it and all that, because you're going to spend a whole heap of cash finishing and furnishing that property. I'd recommend to people take that money and invest it into a property first. Make the money, then you spend the money.
I like that formula. So what if that means that you are a family that's cramped, like a family of 4 that's cramped in a 2-bedroom, and it's going to take you another 2 or 3 years, before you can make some type of transition? I mean, you're saying a person should actually, instead of looking for a house, still look for investment property and sacrifice and still create that passive income stream. Is that what you're saying?
Well, everybody will have a different situation, right? So nothing can ever be one size fits all. But for the most part, if that is an option or something that someone's looking to do, is to invest. I like the formula that Sandy mentioned and that many others talk about. Go out there and grab or snag that investment property first.
Yep. And that might mean a little extra sacrificing, but hey, the long run and the long term, I think the results will fare much better for anyone who does it that way.
Yes.
So what do you think about folks who purchase properties, and I hear this a lot in the social media space, who purchase properties for a Airbnb use or some other type of vacation rental?
I like that space also. As a matter of fact, that's a space that I started in 20 years ago. Before there was Airbnb, there was Ocean Blue. And that was my company that I started on South Beach and throughout the Miami Beach area. I had a company that rented short-term vacation rentals, luxury rentals, and it was a phenomenal business. It's actually my start into real estate. And I believe Airbnb, just like commercial or any of the others, those are investments. I like investments, so I'm very pro Airbnb. One thing I can say for those people who are interested in that model or path, it is more of a job in that you do have to really manage it like a business. It falls almost into like the hotel type of sector where it's an active business, whereas commercial multifamily is it's a lot more passive in terms of day-to-day management. So I think it depends on the person and what their workload and their, how effectively they can manage an Airbnb. But if they can manage it, then I say go for it.
And I'll ask one more question before I pass it back to Lisa. What are your thoughts on property management companies? Because I know a lot of folks who do invest in commercial real estate or any other types of investment property, they like to utilize these types of organizations to manage the property instead of them being actively part of the management. What do you think about that?
Okay, you're really asking great questions. I just fired one last week, a property manager.
Wow.
Oh, wow.
So, I'll tell you this, when you get to the larger properties, you absolutely cannot do without them. And when I say larger, I mean, 60 doors or more. Okay.
Okay.
So once you get to the 60 door or more, you're going to need a property management company. It will not be manageable, self-manageable, so to speak. When you're 60 and under, you can put your staff or people in place to manage that asset more effectively. But just to give you just a quick, because like I said, you hit a button there. With the property management, never, ever give your asset away without overseeing it. You need to, if you're going to use the management company, you have to manage the manager. And you need to be looking at those financials. You need to be involved with setting the goals, the direction, the marketing, business plan for that asset. No one is going to care about your investment typically more than you do. But one thing, there is light at the end of the tunnel. One thing I can say is the larger the asset, the better the management companies tend to get. So when you are in that 5 to 60 range, the management companies, your options are going to be somewhat limited and they're kind of hit or miss. Once you get over that 60 door range and you start having larger properties, the management companies are much better and they are much more professional.
And much more expensive?
Actually, it's less because the cost is spread over a larger property. It actually comes down. So the larger listen, let me tell you a little secret. This business, the bigger you go, the cheaper it gets, the easier it gets. And I know that sounds bananas, but it is very true. A lot of people think, well, I'll go with a 4-unit or a 2-unit. It's so much easier. Actually, it's much harder. The financing is much more difficult, so on and so forth. You get over $1 million of an asset that's worth over $1 million, everything changes, everything gets easier. And I'm not the only one saying that. You can go out there and start digging and checking yourself. But it gets easier. But I would say this, you do need your learning curve. And, that's going to look like quite likely maybe starting with a smaller property because you do need some experience and some know-how with how to manage and, handle the asset. So given that, once you give yourself that time, leap up and take a big leap.
So thank you, ZaZa, you're really giving us some stuff to think about. I hope for those who are watching that you really think about some of these options. Yeah. Please click the subscribe button. Please click the like button because ZaZa is just dropping some stuff today. And I want to make sure that you have her website, zdinvestment.com, just in case you want to look further into Miss ZaZa Davis. Go ahead, Lisa.
I know we're at the top of the hour. I was wondering if you could hang around for about another 5 minutes with us.
Yeah, sure.
Okay, I wanted to ask you a question about one getting educated in investments. You were giving some information on how to calculate whether or not a certain investment is profitable based on those added income streams. Something I always hear talked about in analyzing investment properties is this term called cap rate. Can you explain what a cap rate is and how you use it to quickly determine whether or not an investment is worth it or not?
Yes. So basically, the cap rate is telling you about the net operating income of the asset. So if you take the net operating income and you basically, let me give you the actual formula. Let me just pull that up for you. For those people who are like brainiacs and they want to jot notes, I'm just going to give you that formula.
It's always good to have people in your lives who understand these formulas that investors use all the time.
Yes, so the cap rate formula is pretty simple. It's the annual NOI divided by the market value of the property. Okay, so when I just gave that example, I kind of done a reverse calculation to show basically I did NOI divided by cap rate, which is like the opposite, to show what profit you could potentially make on the asset. It's kind of like reverse engineering or just kind of playing like back of the napkin math. Um, so it is helpful to do that, but a lot of things that we do with larger assets, we are modeling them. So because we're looking out 7 and 10 years at the asset and its performance. So
So, if someone wants to invest and they don't understand these things, but they want to get with an investment group that does, how do you help others who are interested in investing? And how do they, how does that relationship work with your company?
okay, well, let me first explain. There are two types of investors typically in commercial apartment investing or commercial multifamily. One is a general partner or GP, and the other one is a limited partner, an LP. I would be what you consider like a GP or general partner, owner operator, that sort of thing. That would be my title. When we invest in the larger assets, a lot of times we give investors or people who are interested the opportunity to ride along with our success and our proven track record. We do the heavy lifting and we do all of this tracking of cap rates and NOIs and spreadsheet mania and all that stuff, while investors get to piggyback on our success. So that looks like coming in as an LP or a limited partner. And those limited partners can usually tap into an investment and some pretty good returns, typically anywhere from 10 to 12% returns on their capital and an IRR of somewhere between perhaps 18 to 21%,
What's
which not,
IRR?
it's an internal rate of return. I'll talk about that a little bit more. But the best number, I guess, to look at it for most people is their annual return. And those annual returns look like the former that I just mentioned. So, and they vary, but they're very good. If you compare it to bank, putting the money in the bank, or the volatility of the stock market, or the low returns on CDs and certain other assets, or certain other investments, investing as a limited partner in commercial multifamily can be quite appealing. But yeah, we allow people to come in as limited partners for as little as $50,000, and it ranges up from there. But and some of our deals we do require investors be accredited, and there are some opportunities for non-accredited investors also. So, but that would be something that could tell you more about, or anyone who.
That's a whole nother show. Accredited investors versus non-accredited. Well, we gonna have to have part two. It sound like eventually, Ms. ZaZa.
Well, accredited investor. Oh man, I'm going to be back on Google because I'm getting brain farts here. But if you would have an accredited investor has a net worth. I think it's over $1 million, not including the primary residence, something like along those lines. And you guys out there can Google check it. I could be off a little bit, but non-accredited, there isn't that limitation. You could be any net worth as long as you have the funds. You could invest it alongside of us. So we do have those opportunities for non-accredited and accredited, just as, the opportunities present.
And then I think my final question, and I'll turn it back to Sandy for her final question or comment. Was there a crash course? Is there a crash course? And the other thing is, have you experienced anything bad so far in the industry?
Yeah, well, okay, crash course and then bad experiences. I'll start with crash courses. A great way to learn about multifamily or commercial multifamily. I've read like a number of books. One of them that I really enjoy, of course, I won't be able to think of it off the top of my head. But if anybody's interested in a few books, feel free to reach out to me directly on my Instagram, or you can email me. I'll give you a few books that are fantastic for actually learning about multifamily. And and I do apologize that I can't think of them right now, but there are some good ones out there, at least a couple that I really would recommend. And then beyond that, a great tool for learning is talking. You can always use loopnet.com to look at multifamily deals and start analyzing them and just kind of getting familiar with what's out there in that commercial space. You just need to put some filters and parameters on for your market, what you're looking for, that sort of thing. Excellent for running numbers and plan with those cap rates and certain things like that, familiarizing yourself with those. So those are a couple of resources, books. People like myself reaching out to people like me for more information. I'm happy to teach and sort of mentor somewhat for people who are on this path, especially people coming from disadvantaged backgrounds or people of color, because we don't have a lot of opportunities in this space. So I do like to do that or offer that. And then beyond that, bad experiences happen, like you all know it with anything when you're not prepared properly. I would say, since being in the commercial space, one bad experience I had is not understanding the math. You need to have financial literacy in this commercial space. If you don't have it, you either overpay, you may sell your assets for less than they're worth. It's important to buy things right. So one bad experience that I had was selling off a portfolio for less than it was actually worth. I probably cost myself a couple $1 million by letting the broker set the price for me and trusting the broker. And that was unfortunate because you really need to understand the valuations for these assets. And it's not very difficult, but you do need to spend some time really understanding that. And so that will save you also from overpaying for assets. So.
Wow. Thank you. Thank you so much for sharing. And thank you for being here this morning. Sandy?
So ZaZa, I know that you have to go, so I don't have any other questions. I just wanted you to let folks know how to reach you and what types of services your company provides.
Well, basically, as I mentioned, for those people looking to invest passively into multifamily, definitely reach out to me. I'm happy to sort of mentor and coach through the process and let you know what that looks like, or how you can get involved from a passive standpoint. But also for those people looking to become active general partners, or they're looking to do their own thing, I'm happy to give you a few tips and tricks to save you from some of the head bumping that went on with me throughout my investing career. So reach out for that as well. And that's it. And you can reach me. My email is there, zaza@zdinvestment.com. Or you can, much better for me is if you actually reach out to me on social media. Instagram handle is @zaza_Rena1, and that's here on the screen. So please reach out. Let me be a resource to you. I love to be a resource for those folks who are looking to get into this space. So definitely hit me up.
Thank you so much, ZaZa.
Thank you, ZaZa. You must be lonely out there because we got to get some more folks up there with you.
Yeah, we got to get more people in the fold, get some active investors. I'd love to see more women doing this space. And I'd love to see more women of color or men of color in this space. So I'm happy to help, like I said. So come join me.
Absolutely. Thank you so much. Have a wonderful day.
You too. Thank you, Sandy. Thank you, Lisa.
Thank you, ZaZa. Have a great one.
Bye-bye.
You too.